Hi everyone. Today is September the 25th, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are in full bore hurricane prep around here, and so no midday Moneyball today. But let's take a look at what happened with yesterday's pricing. I want to show you something that it's a liquidity sweep, and it's what traders have been doing and getting these dips. Many of us buying the dip get stopped out on these liquidity sweeps, and what we have to realize is that's what they are, so we can get right back in and get into the trade. What we have to do is just be careful about that. So what are we looking at today? We've got still a range of motion. Here's the old high. We're going to put that up there because that is important. That's 572. Lots of motion saying pullbacks or buy zones. We've got a few weird things going on in the market space, but neither here nor there. We'll just look at the buy the dip formation. So what did we see in the overnight? We swept down into this candlestick, but we are sitting inside of yesterday's candlestick. So the breach of the close tells us, hey, something's up. Buyers could be running ahead. We need to break that high, pull back on something tiny, and then move forward. That's going to give us further upside motion. The baseline actually is all the way down here, okay? But we first want to position at the low that is currently viewed in the market right now, okay? So let's quickly go through all of them so you can see the big picture, and then we'll break down into the individual spaces. So here we are, still sideways. Tech really got lifted by Mr. Huang coming out and saying, hey, listen, I'm not selling NVIDIA anymore. But if you got billions of dollars of the stock, what are you going to do? Hold on to it forever? No, you're going to do something with it, and there he goes. All right, so where are we looking at from a support zone? We are inside of yesterday's candlestick until we breach it. That's 485, 486, something like that. We are going to have a topping formation, but notice this still is incredibly bullish. We've got a cross current, longer moving average down. It takes a while for it to get up. Shorter moving average up. We play the short time frames, pullbacks or buy zones. Pullbacks legitimately could be coming at 481. Now notice, this is what I said yesterday. A liquidity sweep occurs and all the traders come back in. So a lot of times we get nervous when we see this sweep that comes down aggressively and then turns around. I'll show you how to look at that today so that you can get back into a trade instead of staring at it, licking your wounds. You just got to get back to business. All right, knowing that if you're trying to buy a dip here and you're underneath these levels, your dip buying should be in very small amounts. That's how you're either going to get out with a scrape or stay in because you can manage the heat downward. My thought is get out with a scrape and then get back in. Okay, if we expand, the next lines in the sand are going to be into 490, very thin volume profile right there. Okay, let's get to the ES. All right, here we are, almost at the top of yesterday's range. So this one looks pretty strong. Here's the thing. In order to say, hey, I want to buy, and you're not waiting for a dip, you really need to let it breach, pull back, and then hold. That takes patience. You've got to take patience with the moves, and then the expectation of saying, okay, if this is what I expected, does it still hold? Once you fall back into that range, your new stop really ends up being the high of 2 candlesticks ago, give or take a couple of points. Realize that your size is going to be fairly important. Notice the dip buying, same kind of liquidity sweeps we've seen day after day. They just come in and run, everybody stops, and then turn around and come right back in. Okay, that's just the way the market works, folks. It is. Hate to say it, but that's what they do. They're out there to take our cash. Who is they? Anybody with a big machine and lots of money. Okay? Here we are looking at the NQ inside of the range, inside of the close of the prior day, and sitting right on top of the VWAP. So this one looks a little weaker. Since we're inside, we're going to wait for the base if we're looking for a long, but also realize arguing at the VWAP is going to make the trader very likely to say, I think, well, that ADX needs to be a lot tighter than that. Hang on a second. Let me look at this ADX. Length. Let's try a 3 here. All right, that looks a little better, but not much. Sorry, I am trying to get the patterns to give us strength. Let's just look at a couple of days and see if it gets all wiggly. Perfect. Perfect. All right, once we get up over that 60, we know that our dips are going to be buy zones. So that's really what we're staring down. And the very top of the range, the bottom of the range, we've got at 20. This price action doesn't do that very much. And the top of the range, instead of 60, let's make it 80. So we've got equal high and low. Okay, now let's get back to business. So the pullback, if you're looking for a long, you want to get to around this area, 20,074. That's going to tell you, hey, I might see some long action here. If you buy it, it must hold 20 points below. That's where that support zone is going to sit. All right, I'm going to put this wick action here so we can see that 20,300 is above us. We're going to walk through this wall of worry next, probably closer to the 50% marker. So I'm going to eyeball that and bring it down a little bit more. But you can see this thin volume pocket could easily fill. All right, okay, that's what we've got going on there. Pullbacks, here's the best thing to do. You wait for the pullback. If you take the trade long, because we're in direction, make a tight stop. And don't size up. Little clips here and there are going to give you an okay opportunity for saying, listen, if I get a liquidity flush and I get stopped out, I need to look at my daily edges and go, wait a second, everybody was buying there yesterday. Maybe that's the line in the sand that you want to look for if you're thinking about covering your short or going long, right? Trying to do mechanical motions, showing you a bit more about how to see a liquidity sweep or inventory correction is what they might say. Here we are in the YM. Take a look. Higher lows, higher highs. It is by the dip, folks, but we have got a thin pocket right here, so we need to be careful. Are we inside of yesterday's range? Yes. Are we above the close of yesterday's range? Yes. So the pullbacks into these edges, particularly near this VWAP action, are going to give us some kind of long opportunity that we need to start watching frame out on our tighter time frames. Okay? Now, that's all I'm going to work on here, because what I want to do is go to these hourly charts and have you have a peek at these liquidity sweeps. So hang on, I need to draw some hello, hang on a second. I need to draw a couple of formations and it's not letting me do it. Hang on. Okay, so what we've got here is the 4 a.m. candlestick right there, and then here we have the opening range candlestick, and you can see they're very similar. So I haven't drawn an additional line there. That's the 4 a.m. Now here is the 8 a.m. in progress. I did start a little late, but this 8 a.m. candlestick is going to be very, very interesting. You keep your eyes on that open. It's very sideways. So here's what could happen. Notice what happened yesterday. See this? Liquidity sweep at 2 o'clock. Liquidity sweep at 10 o'clock. So what is that liquidity sweep? Everybody's coming in, buying the dip, buying the dip, buying the dip. Ooh, this is going to hold. Trend up, momentum up. Things look great. Runs, everybody stops, and then bumps all the way back up. Also, inventory correction from the top down. This is going to be a normal cycle formation in the near term because intraday volatility is on the rise. All the other levels are the same. Dips or pullbacks, look to the regions that give you higher lows to trade in the direction of trend, but realize that trend is very messy right now. Let me make sure I've got this Fibonacci in the right place. Value area high. What? Value area high. Oh, that's an old one. Never mind. Here it is. That's yesterday's. Let me delete this. Okay, so here it is. I've got value area high, value area low, pre-market. It's going to shift as it moves. Look at what it came into. 1.618 pre-market event. That happens tons of times, right? Pulling back to the value area high inside of the opening candlestick formation, which is almost like the 4 a.m. candlestick, right? Sitting right inside of it with this 4 a.m. motion being very, very important for the support edge, okay? Dips or buys, dips or buys, dips or buys. All right, let's take a peek at this one. Look at how tight the opening candlestick formation is here at 1800, 6 o'clock. And now let's make sure that we see what 4 a.m. is well below it. So we need to draw another one that suggests potentially a revisit to that area. Okay, this is heavy congestion. Let's draw our new Fibonacci's. All right, let's do it. Value area high, value area low, expansion up into the range. We should see something there. All right, so pullbacks, again, buy zones, point of control way down here at 57.74. The VWAP for this range is somewhere around 57.76. I like that area for long action to develop. I liked it yesterday as well. And the liquidity sweep got me, but I waited until it came into those lower levels to get back in. As soon as it started getting back in, I said, I'm going. Because I know it's not a move. It moves so quickly, you know all it's doing is running stops. And that's what you have to think about. Let's take a look at the NQ. Let's remove this Fibonacci. Here is yesterday's 4 a.m. Look at the opening range. This very tight opening range. We have not visited the opening range since we came in. And so now, if we look at the 4 a.m. candle, we can see that the traders are really trying to hold that zone. They are trying to hold that zone very, very tightly. But notice, there's a lot of resistance up here. So if you bought this dip and you keep crashing into the value area high, say to yourself, should I be doing that? No, we shouldn't. We should be breaching it if there's a lot of pressure. So you take some profit off and you raise your stop. All right? Upside action, 20,220. We could be very sideways today. If we breach this opening range, this is where everybody's shorting. So we're going to see the first pass short into 20,189. When it fails, it's going to be a quick snap short. But if your moving averages are underneath you, you're going to want to take some profit until the price action stabilizes. All right? If it breaks out, it's going to run stops in a liquidity sweep. All right? So make the stop tight. Don't give it too much room. Don't use too much size. And all should be fine and dandy. All right. That's it for me, folks. Good luck trading today. It's going to be a sticky one, my thought. And again, no midday money ball today, doing all kinds of hurricane prep. Take care.